It's time to take a look at the private equity landscape in South Africa and on the continent with Simon Murray. He's co-head at RMB Ventures. Thanks so much, Simon, for joining us today. Well, for many merchant banks, private equity has become a vital additive, as they seek to diversify their income streams. It's become a focus for RMB as well. Why now? Just how much of a big business has private equity become?
Private equity is something that RMB's been a very heavy investor in probably over the last 20 odd years. So it's been an integral part of the business for a long, long time. It comes and goes in cycles in terms of when you're investing and when you're harvesting. So maybe because we've been doing some investing recently, it's got a bit more publicity, but it's always been a core part of RMB's DNA.
In fact, you've built up a portfolio that, just what are we looking at in terms of scope and scale, of the portfolio that you've been able to build up over the years? It's
currently around 5.5 billion rand fair value, which is probably down from its peak when we had life healthcare as a major asset. So it generally hovers in the range of 5 to 10 billion rand.
5 to 10 billion rand. And what kind of returns are you enjoying? Because I came across an article saying that investments are expected to generate a minimum annual hurdle rate of 30% on the funds that are invested.
Yeah, I think 30% is always a good target. If you look back at RMB's history, we've comfortably exceeded that, probably over the last 15 odd years. So it's been a very, very profitable asset class for us. I think returns comfortably above 30%.
And exceeding it still, if we're looking at this year's performance so far?
We don't measure it in an annual performance, so we really look at the life span of investments, and we're certainly not expecting to see a reduction in those IRRs below 30%.
Of course, RMB differs from its competitors within this playing field in that it invests off its own balance sheet rather than through a private fund in which several investors actually participate. So let's take a look at the kind of process you go through and the criteria you look at before making an investment.
I think the criteria are quite similar for a genuine third-party fund like an Ethos or an Actis. We go through the same due diligence process, the same investment analysis process. I think we have some differences in the way that we can look at the asset class because we're not as time-focused as some of the third-party funds. If we need to hold investments for 10 years, we can hold them for 10 years. And because we're not needing to go out and market to investors, we can take sometimes lower returns, sometimes higher returns, depending on what we think is correct for a particular investment.
So where are you finding opportunity right now? Do you have specific preferences that sit on your list right now?
We're very much generalists. The South African market's too small to specialize in a particular asset class. We're seeing quite a lot of opportunity in some manufacturing enterprises. We've just concluded a buyout of Denny Mushrooms, so that's in the FMCG space. So generally across the sector.
Take us through the rationale for that buyout of Denny Mushrooms specifically, because from AVI's perspective, they saw it as no longer being a viable entity in the face of the wide range of cheaper imported products that come through. So the investment case that you saw it boasting?
Yeah, we like boring, quiet, stable, not exciting investments. We think there's a lot of runway for Denny as an asset. We think that the fresh mushroom side, which is very difficult to import, is something that still has legs. It's a business that's been through a couple of buyouts before, and we're quite excited about it.
What's your plan there? Because it's come at a price tag of 263.5 million rand. What are you looking at doing in terms of accelerating those growth prospects for that company moving forward?
Again, we're very boring staid investors, so we're not looking to do anything different to what the business has been doing. We think it's got an exceptional management team, and now that they're shareholders and owners of the business, we're comfortable that they'll unlock value for us.
Of course, that's some of the opportunity you're seeing in South Africa. Just how far onto the continent does your interest stretch?
So private equity in Africa is a very hot topic at the moment. I think there's a lot of funds that are being raised and chasing deals. You've seen the entry of Carlyle and a number of other big brand third-party funds. We're very cautious about investing in Africa. We've been dipping our toe in the water probably for the last 5 years. It's something that's definitely on our radar screen, but we're cautious. We like to do things slowly and in a measured way. We think in 10 years' time it'll be a significant part of our business, but over the next 2 to 3 years it'll be a small part.
Does that caution alter the minimum returns you need from the rest of Africa compared to what you're required to see from South Africa?
No, I think we would look for fairly similar returns. I think we rather look for low-risk investments that generally come with a lower return, rather than something that's maybe a bit more racy and would come with a higher return attached to it.
Of course, we've got investments in China and India as well, and while those have been labelled risky, RMB seeing as offering lucrative opportunities. To what scale are we seeing expansion into those territories?
The China expansion was something that we went into a couple of years ago, and I think proved to be quite difficult for us. I think we made moderate returns in those investments, and we've not expanding that operation, so we're not seeing any new investments going into China. India is a very exciting space, and we're trying to find the right recipe for cracking the Indian market, given our capital base and our risk profile. So it's something we'll see some more investments in the future.
What are some of those apparent challenges that you faced in China?
Language, culture, time zones. You know, private equity is an asset class that doesn't travel easily. You need to have an investment DNA and an investment style that you've built up over many years, and we found that quite difficult to translate into the Chinese market. We're cautious. We went in slowly, and I think we saw over a period of time that it wasn't an area that we thought we had a real competitive advantage in.
Well, hopefully your shared African culture will bode you more success on the continent itself. Simon, thanks so much for joining us this morning. Of course, Simon Murray is co-head at RMB Ventures.